Hi guys, this is Amanda. In my last two videos, I told everyone that I want to start a new business to help the entrepreneurs, founders, investors all around the world to do business with China safely, successfully. And when I told my friends and my family my ideas, you know what they're saying? They told me that, are you sure? You can see that many global companies, they are leaving China right now. Well, if you follow the news, yes, a lot of media give such kind of report. Microsoft, IBM, Oracle, and many 14 Global 500 companies, they are leaving China. Yes, but the founders will never give up easily. Actually, I did a really serious research on this topic and found something very interesting. Here is the answer, and in this video, I will tell you who is leaving China and who is entering right now. So, let's begin. According to the World Investment Report 2026, international investment is facing a turbulent era. Last year in 2025, FDI, which means foreign direct investment, rose by 6%, according to consecutive years of decline. The total amount of China's FDI kept going down for the past few years. As we always heard from the media, this will be described as foreign companies are leaving. The industries who live in China are like consumer electronics such as Apple, Samsung, traditional autos such as Dongfeng, high-tech company IBM, Microsoft, and also some financial institutions stopped their planning to enter into Chinese market, such as Morgan Stanley, Goldman Sachs, UBS. The reason why these big companies are moving out of China is obviously because of geopolitical pressure. With Trump's return to the presidency of a second term, stricter tariffs and semi-export controls became more institutionalized and long-term. China has fired back too. As the two sides keep the trading blows, more and more Western companies are moving their business out of China. But there are also some other reasons for this. After decades of accumulation, Chinese industrials in autos, consumer electronics, internet service, and advanced manufacturing are no longer low-cost followers. Many Chinese companies now compete on speed, product iteration, and price discipline. Space for these big foreign companies is less and less, so that they have to change the strategy towards Chinese market. And also, the cost structure, such as rising labor and factor costs, also drive the foreign companies to rethink the Chinese business. But when you examine the exit stories more closely, you find that some of these 14 Global 500 companies are not simply exiting, they are repositioning. Take Apple as an example. Its tens of thousands of engineers and hundreds of suppliers in China have now been replaced. This reduces FDI volume because large new assembling facilities are no longer being built in China. Well, higher value but less capital-heavy functions remain. The pattern is better described as manufacturing out, engineering retained.
Good.
On the other hand, the number of newly established foreign invested enterprises rose quickly. So, what kind of new business opportunity they're seeing? I looked into Chinese corporate information platforms called Qichacha. Many of the newly established foreign invested companies in China are SMEs, which are more specialized and more technology intensive. They may not bring huge upfront capital spending, but they bring something else: R&D capability, intellectual property, engineering know-how, and niche technology. For these specialized SMEs, China is attractive for a very practical reason. China has dense industrial supply chains, fast-moving suppliers, and a large pool of engineers. If a small technology company wants to build a prototype, test it in the market, improve the product, and then scale into mass production, China can shorten that cycle dramatically. That gives these companies a better chance for turning a technical idea into a commercial product. Another group is focused on Chinese market, such as some Japanese and Korean specialist suppliers. Some of them serve EV makers, battery companies, robotics manufacturers, optical component companies, and advanced manufacturing customers. For them, being in China is not just about selling to China, it is about being closer to their customers, responding faster, and joining the product development process earlier. And you know what? This is not only about SMEs. Some large global companies still take China's market and industrial strengths as well. BESF's Zhanjiang urban site is a good example. It is an 8.7 billion euro project powered by 100% renewable electricity and built explicitly around an in-China, for-China model. Siemens Healthineers is another example. In early 2025, it began construction of a $139 million R&D and manufacturing base in Shenzhen. That is a clear sign of deeper localization of medical imaging. So, these examples tell something important. Foreign companies, they are not all leaving China. Some old capital-heavy investment is pulling back, but another type of foreign investment is moving in. These companies are more specialized, more localized, and more closely connected to Chinese technology and industrial ecosystem. But I believe many people who are interested in doing business with China now, you must be wondering how to judge the geopolitical risk now, especially those founders from high tech such as AI or robotics. Actually, the Chinese government is placing unprecedented emphasis on scientific and technological innovation. So it's extremely welcoming and open to foreign companies. These overseas experts who start tech local company and use this Chinese market grow very quickly. Many of them are also growing to global market. So my view is this: if you are working in technology innovation, whether you are a founder, engineer, operator, and investor, China is still worth a serious look. But I have to be objective. In today's geopolitical environment, rules around core technologies are becoming tighter. The US sanctions, export controls, and investment restrictions becoming more and more serious. The back and forth rivalry between China and the US is also getting a lot more tense. In this kind of climate, I don't think everyone will going to benefit. However, in certain non-sensitive, niche technology markets, the business environment is actually much safer and more open than you might imagine. There is a huge information gap. Over the past years, I have been spending a lot of time talking with China's investors, technology founders, startup communities. What surprised me was this: I kept meeting more overseas founders, scientists, and entrepreneurs who are actually coming to China to build their businesses. While the others are on sidelines, if you act, you will get greater rewards, right? And that's precisely the kind of business I'm in, helping those who are interested in China to search for opportunities, manage risks, and find the best partners. As for the problems that many people are concerned about, such as IP, cross-border capital flows, I will also do deep dives in the future. So let's go back to the topic at the beginning of this video. Do you think there's still a lot of business opportunity to help the foreigners to enter into China? I do. I will definitely do my best to help those who want to start your business or cooperate with Chinese partners. Let me summarize today's video. Right now, China is like an unstable elephant charging toward high tech. For any sharp-minded business person, ignoring it completely might be the biggest risk of all. I'm not saying everyone should rush into China right now. I want to help you to understand what is really happening on the ground in China and help you to decide whether this is an opportunity or a risk. Here is a report offers more detail about this topic. If you are considering expanding into China or you're evaluating whether China is the right market for you, you can also contact me with a small chat. My genuine goal with this channel is to help people who want to do business and find real opportunities in China. If you want this video helpful, the biggest way you can support me is just by hitting the like button. It will tell the algorithm to push this out to more people who might be really interested in this topic. Thank you for watching. Let's get rich together.
Thanks for watching. Please join me and let's get rich together. Subscribe me right now and don't forget to ring the bell. See you next time.